Have you ever stared at your bank account after payday and just wondered where all your money went? Well, in this explainer, we are going to do just that. We are cracking the code on your Canadian paycheck.
I think we've all been there, right? Especially with that very first paycheck. You see the number you were promised, but then the deposit hits your account and you're left thinking, hang on, where did the rest of my money go? That is the exact mystery we're solving today.
So this whole mystery really boils down to two key terms you'll see all the time: gross pay and net pay. Gross pay is that big, exciting number, what you earned. And net pay, well, that's the smaller number that actually lands in your bank account. Our mission is to figure out what happens in between.
To solve this thing, we need to look at the main piece of evidence, and that is your pay stub. It holds all the clues we need to understand the full story.
Okay, let's start at the beginning with gross pay. This is the total amount you earn during a pay period. So, your hourly wage times the hours you worked. Think of it like a whole pizza, right? Fresh out of the oven before anyone has taken a single slice.
And on the flip side, you have your net pay. This is what most people call take-home pay. It's what's left of that pizza after all of the slices, or deductions, have been taken out. It's the part you actually get to take home.
The formula itself is super simple. You start with your gross pay, you subtract all the deductions, and what's left is your net pay. Easy enough. But what exactly are those deductions? That's the real question, isn't it?
And that brings us to the heart of our investigation, the why. Where does this money actually go? Because it doesn't just disappear into thin air. It's going to very specific places for some really important reasons.
These are what we call payroll deductions. And here's the key thing. Your employer is legally required to take these amounts from your pay and send them directly to the government for you, so it all happens automatically. All right, deduction number one, the big one, is income tax. When you started your job, you filled out a TD-1 form. Your employer uses that info to estimate how much tax to take off each paycheck. And hey, if they take too much throughout the year, don't worry, you get that back as a tax refund. So, where does that tax money go? Well, this is it. It's what pays for all the public services we rely on every single day. We're talking roads, schools, hospitals, parks. It's really how we all chip in to build the communities we live in.
Next up, we have employment insurance, or EI. Think of this one as a countrywide safety net. It's there to provide you with some income if you, say, lose your job, or if you're taking maternity or parental leave. It's a really important support system.
The third major deduction is for the Canada Pension Plan, or the Quebec Pension Plan if you're in Quebec. Now this one is a direct investment in your own future. It helps fund your retirement. And here's the best part, your employer actually matches your contribution. It's a huge deal for your long-term savings. Now, besides those three big government deductions, you might see a few other things on your pay stub. These could be for stuff like union dues, or maybe contributions to your company's health insurance or pension plan. These don't go to the government, but they're still part of the calculation. So your pay stub gives you the breakdown, pay period by pay period. But at the end of the year, all of that information gets rolled up into one final, super important document. Think of it as your official year-end case file. And that document is your T4 slip. It's the official summary of absolutely everything you earned and all the deductions that were taken for the entire year. You absolutely need this to file your taxes. This timeline just kind of shows how it all fits together. The tax year runs from January 1st to December 31st. Then after the year is over, your employer has until the end of February to get that T4 slip to you. And here's where it all comes together so beautifully. If you look at the year-to-date or YTD totals on your very last pay stub of the year, guess what? They should match up perfectly with the amounts in the boxes on your T4 slip. It's the final report card that proves it all adds up. Oh, and a really important pro tip. If you worked more than one job during the year, you are going to get a separate T4 slip from every single employer. You'll need all of them to do your taxes, so find a safe spot and keep them together. And just like that, the case is closed. What started out as a bit of a mystery is now something you've totally mastered. You know exactly where your money is going. So let's do a super quick recap. Gross pay is the big number you earn. Net pay is the smaller number you take home. The difference is those mandatory deductions for things like tax, EI, and CPP, which fund public services and your own future. Your pay stub is the regular report, and your T4 is the final official summary for the whole year. Seriously, understanding your paycheck is such a huge step in taking control of your financial life. You've officially cracked the code. So the only question left is, what financial mystery are you going to solve next?